Hi traders. Today we'll be learning the basics of technical analysis, and these basics comprises so many subjects: the drawing tools, candlestick patterns, chart patterns, indicators, and volumes. But on this video, I'll be talking about the drawing tools and candlestick patterns. Now, what are the basic drawing tools? You know, in chart analysis, we have so many tools for drawing actually, but I'll be focusing on the basic drawings that we need to make price prediction. And these tools are the trend lines, trend channels, support and resistance. They are quite useful to find area of value to trade from. The essence of trading is to buy low and sell high. So I'll be very, very precise on these specific drawings of trend lines, trend channels, support and resistance. So how do we go about drawing out these tools correctly? First of all, we zoom out the charts. Then we have to draw the most clearly seen levels. The most clearly seen levels, that is where we'll draw out. Then we adjust to get most number of touches. Now I'll have to navigate to the chart so that we can experiment these following steps. Okay, here is our trading view platform. Prior to this, all you have to do is to log on to tradingview.com, or better still, download the app, whether on mobile version or desktop version. Now I have it on my desktop version. So we have to go to a coin pair. I would be using BTC USDT coin pair. So I just opened the BTC USDT coin pair. So now here is the BTC USDT. So first of all, we have to do what? Zoom out number of times for us to cover a wider area in our chart. Trading view, you can zoom out both ways. Let me adjust it from the side. Let me adjust from the side. I move the chart a bit up. Now let me zoom out a little bit more. I want to cover a wider area. Okay, let me go to hourly time frame. I think it's more balanced. Let me go to hourly time frame. Let me just reset the price scale. Okay, this is good. I have to remove all the drawings I had prior. So now we talked about adjusting. Now I've done the adjustment. I've done the adjustment. Secondly, we have to do what? Draw out the obvious levels. Let me start with the trend line. We have to experiment the trend line, trend channel, then support and resistance. Starting with the trend line, I can make a trend line in this form. Bitcoin was trending, was having a down trade here. Let me look at something. Let me find something more precise that will give us a very, very clear understanding. Okay, there's a trend here. Let me look at this. There's a trend here. Now there was touches, right? There were what touches. I had this touch. Let me adjust to get normal number of touches. 1, 2, 3, 4, 5. I didn't get this. I didn't get that. I got this. So I got more number of touches. If I say let me adjust to get this particular touch, I might be missing out a whole lot. So I have to adjust. Once I'm making a trend line, you have to adjust to get more number of touches. This is very reasonable. It's very reasonable. Now I can make a trend channel from here. This could be a trend channel. Let me make it perfect. This could be a trend channel. how do we consider this an area of value? Because the essence of these lines is what is to consider the areas of value. Now, Bitcoin from this particular dump try to what get a bounce here but couldn't. It was resisted. There was a price rejection. It dumped to this level. It rallied again, touched this level, rallied up, touched this level, and down, up and down, up here, after much rally and down. Then got rejected here before the breakdown. So the period that Bitcoin was trading in this channel, you can actually make an entry. This could be a good entry point. This could be a good exit. Now, how do you normally trade this? Once I found such area of value, before there could be a breakup or breakdown, I will not wait for the price to get to the extreme. I might make an entry somewhere here after confirmation that there is a bounce. Now, I will likely exit and wait for another what touch on the line. If I make an entry again, I'll exit somewhere in the middle. Now, when there is a rejection here, you know that the price is going down. You can make an entry here and exit before the touch of the line here. This is how to make trade entry and exit within a trend what channel. Let me look for something again to illustrate further. Now look at these lines here. This could be considered. Let me make another one. Now look at this channel. Bitcoin was trading in a descending what channel. Now from this what breakdown, let's say there was a touch here, touch there, breakdown again. So we can consider there was a support here, bounce. Now it touched at this level, started dumping. So this could be our area of value, entry, exit, entry, exit, entry, exit. It goes on till there's a breakup. And remember, you have to wait for confirmation. Now, if you look at this place, on touching the rejection at this level, it moved sideways and broke up. It didn't dump again. So most times you have to wait for confirmations, and you don't trade at the edge of the line. You have to trade in between. Once there is a bounce, you make an entry. Before getting to the next touch, you make your exit and wait for another confirmation that the trend is what following. That price is what following your what the trend. So this is how to make trend line and what trend channel. And in some cases, if you look at this channel here, there was changes before the breakdown. Touched here, touched there, touched there. You saw there was changes. Most times you have to adjust. There will be a time that you have to know that there are changes on the channel. Look at here. There is changes here, right? Now, one thing you have to understand in the market is that it cannot follow a particular line straight, because we don't know the number of buyers and sellers are momentarily in the market. So all these things, there is some deviations, a number of the sell volume and the buy volume. So that's why sometimes it might not be perfect. But that's why if you make your channel, make sure that there are confirmation. It might not get to the touch before the dump or rejection. And it might not actually get to the line before they bounce. There might be some cases it might see the line. So this is an idea. Look at this. This is actually a perfect channel analysis here. So this channel is rightly perfect. So this channel can be followed. You can make some entries and exits here before there could be any change in trend. So from here, you can perfectly calculate your areas of value. This is an area of value. Look at it. Look at it. An area of value. Look at this. Look at this. Look at this. Quite close. Look at this. Quite close. This is not far-fetched. So this is how to make your trend line and trend channel. Now I would wipe these drawings and do something on support and resistance. Now on support and resistance, we've already adjusted our price charts, zoomed out well enough to cover a good wide of area or range. Now is to draw out the most obvious levels, and remember we have to use the horizontal lines for this support resistance. There is an obvious level here. Think I can find a level here. There's a level here. There's a level here. There's a level here. So I might be using few examples. I could actually go on in drawing so many levels, but let me use very few examples for clarity's sake. Maybe in our own time we can draw as many as possible to further our analysis and make it more uh, precise. Now, for the sake of the lesson, let me use this few. Okay. I'm trying to color them for emphasis. Now, on this red line, Bitcoin was trading from up, touched this level, it was a rejection in price. There was a little dump, touched that same level, got rejected, then broke that resistance. Now, at this level, that same level of resistance became support here. Held support, held it the second time, the third time, traded above, held it the fourth time. Seems it has broken below it. So this is actually an area of value. Now look at this level. This level was support level here. Touched again, touched couple of times. So this is telling us, okay, if Bitcoin doesn't break below this price level of support, which it has held for some time, there is a chances of, price rallying up, and it just happened. Remember, it held here, there was rally up. It came, held couple of times, and there was another rally up. So it's an area of value. Now at this point, it couldn't hold. It broke below the support, and support turned resistance. Tested the support at rejection. It was not testing the support level, broken below as resistance level. Now tested it twice and got rejected. That it has to hold the previous support. So this is how you just make your uh, conclusions about the price action. Now look at this. This was price rejection. Break above it couple of times, tanked lower, and got rejected, and it tanked lower. Look at this level. See the touches here. I had a touch 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 there. No, I didn't talk about adjusting, because as I was drawing the line, I almost adjusted them to the most number of touches already while drawing them out. Now look at here. When I'm talking about adjusting it to the most number of touches, there was a touch here. There's a perfect touch here. There's a touch here. This is more like a support level here. From the below, touching from the below means rejection in price. Touching from the above means support. So let's know this, the difference between support and resistance. They can be on the same line, but they might be acting differently, acting as support or acting as resistance. Support and resistance, they go together. Now this same line is acting as resistance here, but at this level it became support here, because it was trading above it. So just like here, it was price rejection here. Here it became support here. So basically, this is how you conclude, make your inferences about support and resistance lines. So we're able to zoom out our chart correctly, draw the most clearly seen levels, adjust to get most number of touches. Further, I will go further to explain some candlesticks patterns. So I'll just explain these few candlestick patterns. Sometimes these candlesticks are very vital. You will see a bullish candle at a particular support level. Bearish candle at a particular resistance level. You can from there make an inference. There could be a rejection in price here. There could be a support. So these candlestick patterns are essential, and considering other factors before you make your entries. Now, which candlesticks are we talking about? the engulfing patterns, hammer and shooting star, morning and evening star patterns. Okay, the engulfing patterns, we have the bearish and bullish engulfing. The bearish is when there is a large body of bearish candle following a bullish candle. This is very very significant to price rejection. This a very is very significant to, this is a sell pressure, showing that the sellers have taken over the market. The sellers are overwhelming the market. But you don't just trade candlesticks in isolation. You have to consider other factors. So at this point, assuming the sell volume is high, it's a clear indication that the market is going down when we have such a candlestick pattern forming in the charts. So the buyers did their thing and the sellers came and overwhelmed. Now you can see the body of the bearish candle is wildly bigger than the bullish candle. So that is why it's called the bearish engulfing, because the bearish candle engulfed the bullish candle, and vice versa here. The bullish candle engulfed the bearish candle. So it's very 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 self-explanatory, as you can see on the diagram. Now, hammer and shooting star. There's no way we'll talk about hammer and shooting star without involving the inverted hammer and the hanging man, because inverted hammer is a candlestick looking similar like a shooting star in body structure, but they are found in different in different area in the chart, different position. Like in the chart now, the inverted hammer is found at the end of a downtrend. It's a sign of what? It's bullish reversal. It's a sign of bullish reversal. Why the shooting star is found at the end of a uptrend, at the end of an uptrend. So it's a sign of what? Bearish reversal. Mostly the shooting star is a red candle, is printed red, and inverted hammer is printed what? Green. But in some cases, it might contravene. Now, the hammer and hanging man. The hammer is a bullish candle found what? At the end of a what? A downtrend, signaling what? Bullish reversal to the upside. Now, hanging man on the other way around is sign of what? End of what? An up run, signaling there could be a what? Reversal to the what? Downside, considering other factors. So once you looking at their body structure, they look similar, but the hanging man, as you can see, is found at the end of what? At the end of a bullish what? Run, and it's usually a red candle looking like a hammer. So most times the printing of the body might actually contravene. Like I said, you might find this one green instead of red, or find this one red instead of green. But basically, this is a perfect what? Hanging man, and this is a perfect what? Hammer candle. And shooting star, as you can see, as it depicts in the diagram here, that's the way it could actually play out on the what? On the price chart. But you don't have to just trade them when you see them. You wait for confirmations with other confluences. The morning and evening star. This is a combination of three candlesticks forming a pattern. There's a bearish candle followed by a doji indecision candle. A doji is an indecision candle, and the third candle will be what? A bullish candle. Once you see this combination of candlesticks, now you know you spotted what? A morning star. It goes with what? The bearish candle, large body of a bearish candle, followed by a doji, then a bullish candle, a very large body of a bullish candle. So this is a morning star, and is a sign of what? Reversal to the upside. Maybe there is a downtrend, or there is a trend that is quite undefined. But citing this candlestick pattern could be a sign of what? A pump ahead, considering other factors most importantly. But evening star on the other way around is mostly found at the end of what? A bullish what? Trend, signaling a reversal to the what? To the downside. That is why you will find what? A bullish candle first, followed by a doji, then a bearish candle. Now look at this second diagram here. You can see the doji. A doji, an indecision candle that has equal wick. The up and down shadows are equal, and the body is either small or no body. The doji might likely have a small body or no body. Like you can see here, there's a body but it's actually small, or it might end up having no body at all. So you know it's a doji candle or an indecision candle. Doji is an indecision candle. So what are the purpose of our drawing tools? Okay, the essence of the drawing tools we've illustrated earlier in this video is to make us understand the market condition, what the market is looking like, the structure of the market. And understanding this market condition will propel us to have a clear definition of the area of value. The areas of value, these areas of value with the what? The support, resistance, trend line, trend channel. And this will enable our entry trigger to enter the market to make profits. The essence of the market is to enter the right time, buy low, sell high. So once we make a good entry trigger, it will be it will be a very proficient trade for us. So this is the essence of what these drawing tools. And considering the candlesticks patterns that we earlier explained, with this we can be able to make a good entry. Now the next video will be on chart patterns. So I'll implore you to subscribe to the channel, like this video, comment, ask your questions, probably where you have some confusions. So thank you very much. Thank you very much for watching my video. See you next time. So remember to subscribe so you get notification for the next video uploading soon. Thank you very much.